Is the market blowing off the top and putting in a very important top before a recession? I think so. And today I'm going to give you a very important update before we get FOMC today, where Jerome Powell is expected to lower the interest rates by an additional 25 basis points, which is very impressive considering the market is at all-time highs and pushing higher, and we still have reasonably high inflation. So this is definitely a very important time in history. And this could be one of the most important market tops that we have for the next 3 to 5 years. So pay very close attention to everything I show you today. It is going to be very important to understand how a market top is being put in and why a market top is being put in. And today I also want to show you gold, so you can look at gold, which is also doing something very historic. So first we need to go back to the monthly chart of the triple Qs, and you can see without a doubt, since that low back in 2022 and the April 2025 low, the market really is just very parabolic. Since we've hit those lows, we've really just gone straight up. And even though we had those corrections and even what people thought was going to be a bear market in April, it is still just a blip on the radar right here on this monthly chart, and we are just pushing straight up with very little pullbacks after we hit that low in April. Now, if we look at the same thing on GLD, which is gold, we have this giant cup and handle pattern that goes all the way back since 2011, and we didn't get the breakout until 2023. And this giant cup and handle also has some inverse head and shoulder patterns with this smaller inverse head and shoulders here. So this has been a long time consolidation in gold. And that cup and handle pattern should have brought us to a minimum target of a measured move to about 270. And you can see we are all the way up here as high as 400. So gold has absolutely blown off the top. And when gold does this, you can see the last time it did do something like this was back here in 2011. We had this smaller cup and handle or inverse head and shoulder pattern, and that breakout happened back here in 2009. And of course, that was after the great financial crisis, and we had that very strong bull run. But once we hit the top in 2011, gold dropped from that high of 45% bear market that lasted multiple years, and we didn't get the recent breakout until 2023. So that high back on gold from 2011 didn't start breaking out to a brand new all-time high from that price for over 10 years later. And that is why these are very important things to pay attention to when the market is doing this, because once more, this could be a very important top for gold for the next at least 3 to 5 years. So pay attention to that, because that is very relevant when we look at the monthly chart of the triple Qs. This is a very similar pattern where we are just blowing off the top here. We had that bull breakout back here in 2024 where we made the brand new all-time high, and then we retested that breakout in April, and now we're just going parabolic higher. And this is a monthly chart, so this is a very macro scale look, and this is more than likely going to put in a final top for the stock market for a very long time, which is going to go hand in hand with the recession that we're looking for, which is very likely going to start next year. So if we zoom in here and we look at the triple Qs on the daily chart, this is a very important thing to pay attention to, because we now have 4 gaps below, and these are all gaps to a brand new all-time high. And these are a form of exhaustion, even though it seems bullish because we're going higher. Anytime you just continue to gap up to brand new all-time highs, that is actually a form of exhaustion, as money is just pouring into the stock market because it has nowhere else to go. And this is going to lead to buyer exhaustion, meaning once we hit this top, which we obviously don't know the exact day or price, there will be no money left to buy into the market. And then once the selling starts, it's going to be a mass liquidation and panic event. And that is why when it occurs, it is more than likely going to be a very sharp crash down. And that is exactly what happens in a blow off top. You go up parabolically, you hit a top, and then you just come right back down just as fast, if not faster, than you went up. And that is that very, very powerful move to the downside after a blow off top is completed. So what you need to pay attention to is price, and we won't know we've hit a top until after we've already come down significantly. Just similar back to this day on Friday, October 10th, when we had that very sharp move to the downside. You're going to see a move like that all the way up here at the top, and then more than likely another slow bounce to a lower high before we really start to crash. So you will see it coming, but it will have a large red day before we finally have that day. And that red day could be today after FOMC. So just pay very close attention to what Jerome Powell is saying. He is going to be asked a lot of questions about recession and the job market, because they're going to be wondering why he's cutting rates while the stock market is pushing so high so quickly. And the act of cutting rates is only going to make more people want to buy stocks and make the market want to go even higher, which is only going to exacerbate the problem that we already have with the blow off top, which is a very unhealthy market condition that will not last forever. So what I want you to know right now is, yes, this is still a bull market and a lot of tech stocks are still going higher, but it is extremely risky to start buying up here without a very solid risk management strategy, which means it's okay to continue to trade bullishly. Just be prepared for the day that we start to see drastic selling, because we are going to go down so quickly and so far that if you are just blindly buying and you're thinking you're going to hold for the long term, keep in mind what I just showed you about how we could be going into a multi-year bear market. And if you're buying for the long term, that is going to be a very painful period of your life, sitting in a bear market for 3 to 5 years possibly, because you are actually starting to invest at what is more than likely going to be a very important market top. Now, I don't like calling multi-year market tops, but this is exactly what it looks like, as I just showed you with gold. That took over 10 years for gold to completely stabilize and start breaking out higher again. And that is a long time to have money tied up going absolutely nowhere. So be very careful here. And I want you to pay attention to all of these gaps here on the triple Qs, which are here at 634.68, 628.55, 618.42, and 611.37, because all of these gaps have a very high probability to fill, which means from today's price, that is at least a drop of almost 4%. And then from there, if we continue even lower, we're going to drop an additional 7.5% all the way down to the 560s. And from this price down to there is a full correction of 11%, which is more than likely going to be happening within the next 3 to 6 months, if not way sooner. So be very cautious here. A very important support right here will be right around 633. If the triple Qs start breaking 633, I would expect it to come all the way back down to at least 612. So pay attention to that very important support. To the upside, we have more resistance levels at 641.52. And then if we break that, we continue to blow off the top towards 650. And then very quickly, let's look at SPY. I'm going to tell you the same analysis, so I'm not going to repeat all of that, but the critical levels here will be the support at 686. If we break that, we come all the way back down to 673, with the very important support below that all the way down here at 652. To the upside, we are more than likely going to find strong resistance at 690. And if we blow off the top and go through that, you are looking for 696 after that. And then because we talked about gold, I have some very clear levels here on the daily chart. We hit that very important high, which was a blow off top high, more than likely at 403. And I don't see any support until we come all the way back down towards 339. And then below that, we have another strong support at 333. Now, if we hold this support right around 361, and that does end up turning into some structure of support, that's completely fine. And then what's more than likely going to happen if that happens is we'll enter a very large trading range and start building out some sort of wedge. And that would take us all the way out into next year with very little movement in gold other than range trading and mostly sideways movement. So if we break 361 in gold, get very risk off, because we're more than likely going all the way down into the 330s after that. And this is exactly what I'm talking about with that blow off top look that we're seeing in the stock market, where we just go parabolically up, hit that top, and then eventually just come parabolically right back down. And that is why there is extreme risk in the market right now. So I just want you to be aware of that. We could start that selling as soon as today after FOMC, or it could come later in the week or even later in this year. So we don't know exactly when, which is why I tell you just follow the price, because as soon as we start breaking the support right here on the triple Qs, and that support is right there at 633, then you immediately know from price to immediately start looking for a risk off move. And that will protect you and save you a lot of money to the downside when that down move starts to happen. So take this very seriously. This is a historic time in the market. We are more than likely going to come back to this day or somewhere around these prices a year or two down the road and go, how in the world did we get here? And how in the world did we not see this coming, that was a top before a monster bear market? So I'm telling you, speaking from lots of experience, that this is a stock market that is trying to put in a very important top. And while we don't know the exact day or price of that top, it is going to lead to very nasty moves to the downside that could last for multiple years. So just be aware of that and make sure you are being responsible with your money. Remember, there's no reason to panic. There's no reason to have fear. All you need to do is listen to the information around following price at these levels. Make a trade plan where you are prepared for any scenario, whether we continue to go higher or we start to drop. And then always in that trade plan, make sure that you have a risk management strategy so that you know exactly how much risk you are taking for any trades that you are putting in. And then that way, even if you're wrong with your trading, you will always only lose what you're willing to risk. So be very cautious here. This is a very historic time in the market, and we could start seeing drastic volatility just right around the corner.